All right, so we're going to be looking at an example. I got one of the students in here asking me if I could do a 40 contract trade, going in with a limit, going out with a limit, no market orders, no partials. So that's what started this whole thing today. So I'm putting in a limit order, and you'll see there's a volume imbalance. I have a limit order sitting right in there, and my stop is below that short-term low to the left of the volume imbalance, consequent encroachment. Okay, so I don't have my stop right in the middle of that tail or that wick. It's just below it. And because these markets tend, even with the crazy volatility we have right now, they tend to act a little bit more behaved, unlike Forex, which could be viewed as many times a brat or unruly child. They'll get a little wild. And what do I mean by that? I'll show you in a moment. So my limit order's resting up there, just under the 14,995 at 994 even. Okay, it starts to run here, but then this is one of the reasons why I teach you not to rush moving your stop. Because if I would have moved my stop at all, it would have came back and dusted me. Okay, bull flag traders are going to be chasing that, and then they'll put their stop right below what would be considered the flagpole low, which is about to get rammed there. Now look how close it comes to my stop. You see that? Consequent encroachment of that wick to the left of my volume imbalance entry. That's why my stop is below that. Now I'm just sitting waiting because I look at this as we have those where I entered long. There's that low and the two lows to the right of it. So there was a small little pool of liquidity there. It came down, swiped them out. Now it'll expand and run for my limit order. So I was doing a bunch of these all day long today. And it was actually kind of fun. But I got a little discombobulated because I was putting real orders in through TD Ameritrade, watching charts through TradeStation, and watching it with TradingView, and putting orders in, and I'll show you where I fudged up a limit order going in. Now I'm rolling my stop because we've had two swing highs taken out. I don't want to see it come back against me now. And boop, just like that, comes out. So $20-some thousand off demo money. All right, now here's the afternoon. Now I was running back and forth in S&P and NASDAQ all morning. So now I'm going to the afternoon session. I'm showing you what it is I'm looking for. Kind of like the amplification what I showed on the YouTube channel last night. So those swing highs, or that swing high and that swing low is what I'm annotating here. And I'm putting in, that's ticks for profit. And I'm actually should be putting it in the field below that for the price. So right now I'm looking for that limit order just filled, and I'm looking for that limit order because I put the limit order in the wrong field, so I'm gonna have to adjust it. You can see it down here. I take profit at 11,300. That's optimistic, isn't it? Optimistic ICT. All right, so let's go to 15,020. There's actually a low, which I'll show you in a moment. I'm going to be thinking could reach down into. And I'm going to show you the perils of moving your stop loss, unlike what I just showed you in the previous trade. Small little fair value gap, it ran right up into that. I'm watching that, and I anticipate price running away from that level. Now this is a 15-second chart. 15 seconds. Every candle is 15-second intervals. So this is high frequency trading. All right, so I'm putting my limit right below that low down there. And I'd like to be able to go long below that as well. So if it trades down there, hits that profit, I'm thinking I'm going to reverse and go long there too, and then reach for that 15,125 level, which will make sense in a little bit. So now I'm rolling my stop, and I'm taking partials. I took half off there because really my bias is I think we're going to come back up and take the 15,125 level out. Remember in the commentaries I stated that if we trade up into that volume imbalance on the daily chart for NASDAQ, I'd be interested to see it sell off up there. I'm thinking we're going to get a late afternoon sell off. So all these runs in here are just short-term little runs. Okay, boom, took me out right there, ran to my stop. It's okay. It was not a losing trade, but it wasn't where I wanted to get out at. So that little low down there where I had that anchor, that actually gets traded too in a few minutes. Now in hindsight, the better thing for me to have done would be to take a larger portion off below the low or close the trade entirely, because my afternoon bias is I think we're going to go up a little bit higher to clear out some buy stops and then use those buy stops to pair up smart money shorts, and they're going to probably punish the 15,000 level. A lot of people think that 15,000 level is support now, and we'll probably crush that and go down into 14.9. All right, so I'm going to set another order up in here, taking a shot at an early opportunity. So I'm putting a buy limit in here, and my stop is a little too ambitious. It's not giving it much room at all, and it comes down. It'll come down and take me out right away. Boom, right there. So that's a stop out. That was a losing transaction. So now my next trade, even though I didn't take the maximum percentage risk loss, I'm not going to do 40 contracts. And you're probably asking, why 40 contracts? Because the YouTube guy that is out there trying to make a name for himself, just putting this out here, that the students that I have that are sincerely asking if it can be done on my side, yeah, I'll do it all day long. Up, down, up, down, up, down. But this was a losing trade. So now I have to mitigate that, so I won't take a trade with 40 contracts next time. I'll be doing it with 20. So I'm watching price in here. It's going to sweep down below that low where I had the anchor. That fair value gap around 15,065 to 15,070 in that area. You see how we traded up into that. That was the better trade. But I stepped away from the screen. Not that I could have done anything about it, because I'll come back to it after I had already run this low here. And again, I'm just trading both sides intraday. Back and forth, back and forth, back and forth. And the trades are not being held very long because the volatility is permitting that. Like it's moving 20, 30 handles in like a minute or two. In seconds, it's moving 20 to 30, 40 handles, which is unbelievable. Like, I love this. This is incredible. I'm going to be real honest with you. I wish I would have joined the Robbins Cup this year with this. right, so we have the market running up, broke a swing high. So now I'm thinking that we're going to run higher. You can see we swept that low. Not by much, but that's all it's required. I'm going to be going in to take a long. So there's that loss, $9,600. That was on the 40 lot. So I can't do 40 now. I'm going to do it with 20. So this is drawdown management. $20 lots. And again, I'm putting it in the wrong place. That should be in the field lower. It looks like it's looking for 15,125 ticks as a profit. And that's the price. I'm going to have to adjust it here. That's what I'm doing now. So I'm using limit orders to get in. The stops are going in at the same time. Now I'm trying to get this anchor or magnet up here to show you that's where I'm anticipating price drawing up into. So 15,125. Okay, short-term highs at 15,000. I'm waiting for it to print 15,100. I'm watching how price behaves once it takes out that 15,100 old high. I have a trend line drawing your attention to because I'm thinking the liquidity above that should not be that formidable. In other words, it shouldn't be viewed as something to go short and go lower yet. I think that 15,125 or just above it has a little bit more liquidity. They want to have those highs. The reason why, it's basically the New York lunch high. So if my thinking is correct and that they're going to likely take it lower, they're going to want to come back and take out the highs that were formed during the lunch hour, clear those traders' plates for them, and then send them packing. So anyone that's short trying to ride that, they're going to get taken out. Their buy stops will be used to be counterparty to informed money selling to their buy stops, so that way they can ride a later in the evening decline. So we're trading down into a buy side imbalance, sell side inefficiency. It should accumulate in here and then rally and reprice up into that 15,100. And then I'm watching how it behaves there. I'm going to see, does it have the properties that gives me the confidence it wants to continue to sweep out that 15,125. We already swept the 15,100, so we have a high of 15,104 thus far. So far it looks good. If it starts to expand on the upside here, I'm wanting to roll my stop at that point because I don't want to get caught in a sell-off before I'm thinking it might come. Because I could be wrong, that 15,125, it might not get violated, but I'm thinking it will, and that's the basis of this trade. Okay, now I'm going to get my stop right there. So it should not go back down inside that buy side imbalance, sell side inefficiency. To come back down into that sets the stage for it completely collapsing into the close of the day. So I'm watching it in here. I don't want to see that tank. I want to see it keep expanding, reaching for that 15,125 level. In this trade here, it's got over 10,000 paper trade equity over top of the loss that I just took of 9,600. This is the byproduct of high frequency trading. In and out, in and out, in and out, in and out. And it takes a great deal of concentration and understanding what you're looking for to be able to do it. But because I promised I would show you more of that this year, here you are. This is what I did on Twitter when everybody thought it was an MT4 rented server. It was just me doing these types of trades, just ramping it up, ramping it up, ramping it up. 1 minute charts and below. 15-second, 30-second, because it gives you lots of opportunities. In the framework here, if you look at this chart, you know, if I didn't tell you it was a 1 minute chart and I was showing you that, oh, my bones are cracking. If I told you this was like a 5 minute chart, it would be easy for you to accept that. So we're trading back down into that short-term little buy-side imbalance, sell-side inefficiency. Optimal trade entry should be forming in here, and this should expand and run up into my limit order. But this looks exactly like any other time frame. It could be just as easily viewed as a daily chart, an hourly chart, a weekly chart. All these time frames are going to behave the same way. Price is going to still deliver the same way. So the reason why I teach you to go into these lower time frames is because it gives you lots of opportunities like this to practice. It does not matter if you don't want to trade it or can't trade it because your life demands don't permit it. You should be in these charts studying them because it gives you lots of screen time, lots of chart time. So now I'm waiting for this to make an attempt to expand up. I like the fact that what it's doing here, it's going up, consolidating, small retracement, sends it higher, consolidates, small retracement. So that means I'm really expecting that 15,125 to 15,040, maybe 35, 15,135 to 15,140. That might sweep that, create the afternoon high of the day. And I guess it could spread to 15,150, but I don't think it will. I'm calling 15,135, 15,140, and then it could probably really lose its footing here and break below that 15,000, maybe 15,009 below that. And there's my limit order getting filled there. Okay? So the loss was mitigated and a new paper trading equity high on this roller coaster crazy train that I've been running today, intraday. Enjoyed. All right, so hopefully you guys enjoyed that. I did a lot, a lot of back and forth exercises, we'll call it that today, okay? I got caught up in it was a sincere inquiry this morning, but I took it as a personal challenge just to show them, and they know who they are here. But obviously, you know, there's a lot of people out there that's trying to make a name for themselves, and they like to say that this can't be done and that can't be done. And just one more illustration that there's no necessity for a rented MT4 server. Okay, I didn't need to do that. My name was never put on an MT4 rented server. There's no evidence of that, absolutely none. And every time I do something like this, it just completely destroys and eviscerates all of that nonsense. Okay, so for the few folks in here that maybe wonder if that still goes on or if it went on, there's absolutely no fraudulent MT4 server, because we're not even looking at MT4 anymore. Newsflash. But I just wanted to spice up this teaching today and also kind of like twist the knife a little bit. But I gave a lesson on the afternoon session yesterday on YouTube. And I told you I would give you the amplified version of it. Whenever I would teach over there, I'll give you the higher order of analysis and what I'm thinking and what is useful, and I proved it today with executions. Lots of them. So we're looking at the E-mini 1 minute chart of the NASDAQ. And here's the low that I saw that would reach down into that. And this was the high here that I thought we would run up into. At 130 right here, this low and this high after 130, we were declining. So what I was looking at was this high and this low. But with this low and this high also for longer term daily range considerations. This is just, post lunch hour, small little range. I'll work with it for analysis, but I'm really getting myself primed, as I mentioned in the voiceover, for the trades that I showed you. This here was entered on a second chart, okay, 15-second chart or 5-second chart. I can't remember which one it was. I think it was 5-second chart. Small little fair value gap, but you can see the candles I'm getting in and then getting out. I'll show you. Sold short 40. Covered 20, it was half the position, and then got stopped out on the balance with the 20 here. Then I went short. I'm sorry, no, I did not do that. I went long here, and then got stopped out, and I put the order in too quick, and I wasn't really prepared to put it in as soon as I did. But when I clicked it, it took me completely out. Trader error there. And then it traded down to the level I was looking for when I put this short on here. That was the target I was looking for. And had it done it, I would have wanted to go long there as well. So I would have got out the short and tried to go long. The market runs up, takes out this short-term swing high. So now what am I doing? I'm looking at this run above here as a setup to get me back up to here. That's why I draw the little magnet from down here all the way up to here on this trade. So my entry is 15,058, and it rallies, comes up, very, very shallow sweep above that high, buy side imbalance, sell side inefficiency, comes back down in. I'm watching that and I'm anticipating, does it spring away higher? It does. Creates another buy side imbalance, sell side inefficiency. I'm allowing for it to come back down into that, keeping partial openings of that imbalance. See that? That is a signature that your on-side order flow is bullish. Everything that we would be hoping to see is happening. Then it rallies one more time and hits my limit order right there, 15,125, and I got some slippage. It looks like 50.50 or 2 ticks extra. Okay, so on the loss mitigation position, buying 20 on a limit exit, selling those 20 limit entries. Okay, no market orders were used today. So I mentioned that I felt that 15,135 to 15,140 could be swept, and maybe as high as 15,150. But I didn't think it was going to happen, but it ended up coming in today at a high of 15,153. Then we have a break. Now watch this, okay? Old high, we run above that. Does it break below that old high with displacement? See that swing low here? It breaks below it. This is not this very weak, anemic decline. It's suddenly doing it. So what is that showing us? The informed money looking at the chart, we see the very signature that is basically like a billboard sign flashing neon saying, we are about to go down. We are about to go down. Okay? So if it goes back up into this imbalance, which it does here, you could be a seller there. And then watch what happens. It does one more time to take out that short-term swing high. Man, when that happens like that, it's over. It's done. It's over. There's no reason to anticipate this thing going any higher. What's the opposing liquidity now? Sell side. Where on this chart does it reside? Here, below here, below here, And now what's below these lows in terms of price? We're at 15,012. Remember I said if it breaks below and starts to sell off from 1525, we could see 15,000 even broken, because a lot of people think that's support. But then we'll probably pull into those 14 nines. Okay, and as you'll see, it's worse than that. So right away, went one more time. That would have been enough for me to go short. My stop would have to be above here. I did not sell it. Okay, I'm regretting it because I could have been all over this, and the account would have been obviously ridiculous. But this here, one more time, taking out the relative equal highs, but leaving this high in place. Not sure what's going on, but my computer is really, really lagging. So the market collapses from that level up there and smashes through the 15,000 level, through the 14,009, and now we're in consolidation. I would like to see it trade back up into here. If it does that, that'd be an interesting thing overnight tonight. Doesn't mean I'm going to trade it. It just means that I'd like to see it get up in there and then sell off, keeping these relative equal lows in place before it goes up there. That would be cool. But 27,000 was the run on here. And don't listen, folks. Don't read into this. Okay, you cannot do this. I'm not promising you're going to be able to do this. I'm just doing this to show you as a thumb to my critics out there. You can see this is the same account that we started back in 2021 that we were running up, and there it is. I kind of regret in a way doing this because I was working with this account to kind of like show the funded traders' way of like building their account up and such. I kind of got some bloodlust today and just went nuts. And once that happens, you end up with something like that. Like that was what I was doing all day long today. All over the place. Boom, 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 boom. Hammering it. So, yeah. So anyway, the idea is that high frequency trading is possible. You can use these concepts on a lower time frames, and it all works just as well as it does on the time frames that I'm teaching it. But on these lower time frames, if you understand the order flow and the time of day and when the algorithms will work certain macros into the marketplace and start delivering price in the manner that they're designed to do, you can, not all the time, because obviously you see me take a loss today. That was more an error on my part as a trader. It wasn't so much that I was reading it wrong. I didn't put the order in like I should have, and it was a loss. But nonetheless, you saw loss mitigation, even with exorbitant amount of contracts. Let me preface this also by saying that TradingView will allow you to trade with contract sizes that, like for instance, like TD Ameritrade, I have to have $17,000 and some change to do one contract of the NASDAQ E-mini. That's their margin, okay? That's the industry margin. The folks that are out there beating the discount broker drum, saying I can trade the NASDAQ for $1,000 per contract. Well, I use that as the backdrop. If I was in that discount broker, this is what's available to me. I'm not afraid to use industry margin. It's not a big deal. Over time, that account will allow me to do 2 contracts. And over time, it'll allow me to do 4 contracts. And then 8 contracts. And then 16. And 30. There you go. Okay? It's not a problem. It's not an impediment. It's not a barrier. Okay? It just means that you have to grow the account. So if you look at the detractors out there, okay, And it's really, this is just for the 2021 group. I don't have a whole lot of you in here that are voicing anything to me, but I do have 2 or 3 of them. And they ask politely, but I know what's starting it. They see other people claiming to do things, and you don't see them logging into a live account. Okay, you don't see them doing that. Even though this is paper trading, these are executions, and it's based on the executions that I'm teaching you in this mentorship, and also what I'm teaching on YouTube publicly for free. If it's me buying and selling intraday over and over and over again, back and forth, back and forth, back and forth, it does not take long to see the math behind it grow the equity. So it's not a matter of needing to have a rented MT4 server. I do this for fun, obviously. I had a lot of fun today. But I have to be careful because I don't want you to be inspired by this to make you think you can go out and do this yourself. Don't try this, okay? These are demo account trades, but people out there challenge me all the time. Do this and do this. I don't even care if it's a demo account. You did not do it with a regular demo account. You used a rented MT4 server. I don't need to do those things, okay? I just need time in front of the charts. My wife went out of the house today, and guess what? I had lots of time to focus in front of this, and I just caught like a groove. And if the gentleman in here that play video games, if you ever got into a game, maybe you got a brand new video game, and you started playing it, right? And all of a sudden, you forgot about eating, you forgot about drinking, going to the bathroom, and then you look at the time, you're like, I've been playing for 5 hours? Where'd the time go? Right. That was what happened today. That was literally what happened. This morning I started, and then I stopped during the lunch, and I said, well, I'm going to present something for the community. I'll actually do the afternoon trades based on the things that you're learning. So I recorded those and just basically ran this demo account up to ridiculous amounts of money. It's not real money, okay? But there's nothing, folks. There is nothing keeping up with that. Period. You can set all your settings to the highest degree. It ain't coming close. It's not coming close, okay? So if you can do 2 or 3 of these intraday price action moves, that can fill in the gaps of, say, if you're swing trading or day trading or short-term trading, okay, and you have a loss. You don't need a lot of movement to fix the errors that you've made in those higher time frame setups, because you can go into these lower time frames and perform surgery and fix those problems, build up those little weak areas that you've created in drawdown. You watched me take a loss today, and you watched me using half the leverage to get it back, and it went exactly where I outlined it, right to my limit orders. Limit orders only, no market orders, because that was another question I got. Your account shows you're doing market orders. Well, I said I was only doing market orders. I'm balancing 3 accounts. Okay, I'm looking at TradingView, obviously, because I'm teaching through here. TradeStation, which you don't even see anything about, and it's none of your business. And then I have the TD Ameritrade. So TD Ameritrade, when I show my results there, I had a fellow say, hey, look, you're just doing market orders. Don't you know how to use limit orders? And I was like, yes, I know how to use limit orders. But it's just easy for me to hot button in, hot button out. I'm looking for big enough positions and movement that I don't need the precision of the limit orders to get in and get out. You follow what I'm saying? So in other words, if I'm catching 100+ point moves in the day, I'm not really overly concerned if I'm getting slipped by 300 points, okay, or 3 handles. I'm not worried about that, because the position size and swing that I'm participating in is so significant that I could care less about the in and out slippage. I don't care. I just want to be in the major move that I'm looking for. Now today you watched me go in there and slice and dice with limit orders, limiting in and limiting out, not taking, any market orders at all. So you can see that these things work. You can't execute in TradingView with replay. Okay, you can't do it. There's no executions with replay. So I'm hopefully satisfying all of these questions and concerns that some of you in here have had, but I don't want to entertain this anymore because now I'm in a live account. So I'd like to just teach like I've been teaching, and we'll see at the end of the year what I believe is realistic for someone starting out. That's what I'm doing with that account. I'm not trying to do this with it. Believe me, I mentioned the other day, I felt like I wanted to do this level of trading in that TD Ameritrade. But because that would not be realistic, because I kind of want to put that little thumb tack at the end of this year and say, everyone asks me what I believe is realistic for someone learning these concepts. What could they do realistically over the course of a year? It would be unreasonable for me to say, this is what I think you could do. That's not going to happen. It's going to take you decades to do that. So in a lot of ways, it's been fun, obviously, but I don't want anyone looking at this and drawing a conclusion that this is what is expected of them. I don't think that my students should have these expectations. But it's there for you to ponder over now. But don't read too much into it because it's just me having fun and showing off. All right, I said I wasn't going to do this, but it's important now. I think that we've turned the corner on dollar. I'm not looking at this anymore. I think we might be seeing some erosion on the dollar. Okay, the only thing that changes that is if we go back above the balanced price range. Okay. So in other words, we'll just call it this. If it goes above the low here on this candle, 97.05 and 5 pipettes, if it goes above that, then we're back in bullish territory. Otherwise, anything retracement just sets up another leg going lower. That's what I'm seeing. We're going to stay off the lower time frames, okay? So hopefully you guys can permit me that. Yeah, I'm not sure what's going on with this internet. It's really, really, really slow. Look at how long it took to load that up. Annotations ain't even showing up, are they? There we are. I think we might come back into this area here and run this high out. What changes that? If we trade below this candle's high. Just the opposite of what I said on the dollar index, okay? Cable. This thing looks like it wants to go here. Really clean level. Single high. Buy side liquidity pool. I like this one. Okay. This one, and if things start to really accelerate, go right back to here, okay? Let me put that in the chart now so that way I have it. Get on that high. I don't have the anchor thing on, do I? Nope. You know why? Because I was looking at that anchor earlier today when I was trying to use it, and I clicked on it thinking that's this. Okay, whatever. Buy side here. That's what I'm thinking initially, if we get above this short-term high. But if we really, really start to break down on dollar, I'm looking over here, okay, for cable. That's long, long term. And that is, again, only if we take out this high and accelerate above here. From these lows to this high, nice pullback to the imbalance here. We've rallied. It could sell off a little bit off of this fair value gap, but I'd like to see it accumulate and then start to go higher. And let's see, ESH2022. And I think with this breaker, we're inside. Let me get this stuff off here. We're in this breaker. there. Midpoint of that, see that? Right in there. So mean threshold. So watch this area here, because we already seen some support trading off the volume imbalance there. So study your charts there, and I'll give you more details about that, and in addition to some other things on the weekend commentary. So I'll teach you a little bit more, but I kind of like want to bring something dynamic today. And I spent all my time just executing all day, so I didn't have a chance to really prepare any kind of lesson. So what better lesson is there except for me actually getting in, doing it, trading it back and forth, and then showing you, what I was doing and why. I know some of you are like, that's what I want to see you do. Do that, just that. Tell us what you're doing beforehand. I know what you want, but what you need is totally something different. Oh, we don't want to hear that. And the NASDAQ on the daily. Trade up in that area here. We overshot it a little bit. Now, watch in here, okay? So look at this low. 14,729 in the quarter. That's my next draw on liquidity, okay? 14,729. So I'm thinking as long as we don't start to go higher, that's where we're going to draw to. And then we'll see what we get from there, okay? But it could come all the way back down into this volume imbalance there. If we go below this volume imbalance and come back up into it as resistance, holy crow. This thing could be in real trouble. I mean, bad, really bad. But I'm trying not to, put too much drama on it, because it might not go there. But that's something I'm watching, because we're already seeing, we went up into this area. I said it would be nice to see go up there and then sell off, but we had one more day. They pushed it through, and then if we start to sell off, watch this again. And if that goes below and comes back up, that will be a position for me to enter with TD Ameritrade, and I will not take profits, and I'll be waiting for this thing to trade down into 13,002-ish, maybe even lower, and I'll just build the account off one big swing trade like that, a position trade, because then some of you guys are like, I want to see that kind of trade. Well, you got to let me see them form. And I think, if I'm not mistaken, no, I got a request for, see that? I am such a nice guy. I'm not going to do analysis. And here I am. All right, so I was asked about Bitcoin, and I wanted to mention how this could happen, but if we have this down close like this, it cannot, it must not, it should not trade back above this candle's high. If it does, it's going higher. Okay, as long as it's starting to go lower like this, we're looking for the old low here, and then the lows over here, which I'm favoring that. To me, here's what I believe. If we trade back above this high on this candle day, if we trade above that, then we're going higher. That's what I believe. I don't think that we're going higher to like here. I think we're going higher to maybe run out some liquidity here. But that, to me, I don't like that, because we have a nice market maker sell model. And if this cryptocurrency is following all of those things that I teach you, that Forex and other markets follow, then it shouldn't do that. That would kind of like disrupt, because we already had a stop run here. Not by much, but it's there. So I'm thinking it needs to just roll over, stay heavy, and attack here. Once this breaks, I think that the selling is going to be relentless and probably very scary. And we may very well see below 20,000 in a flash crash. Does it stay down there? I don't know that. Okay. Please don't listen to what I'm suggesting about this. And this is why I try to stay away from it, because I don't have faith in it. I don't. But if you're holding a gun to my head and say, ICT, I need to know what your opinion is, I'm telling you what I think. Don't take any trades on that, okay? I don't want to hear that you got hurt, and I don't want to hear that you made money off of what I said, because this is something I'm not willing to put money behind. So that is the loudest testimonial that if I don't want to put bread behind it, I'm not making a sandwich with it. So that's going to be it for today. So hopefully you got something out of this. You watched some live trades and watched some executions. You watched the loss be mitigated. And I didn't get the big move in the afternoon. So win some, you lose some, right? So hopefully I'll get something set up for tomorrow. I'm going to try to do some recordings tomorrow and maybe have some of that included on the Friday lesson. If I feel inspired to do it for the YouTube community, then so be it. But I'm not trying to do too much of that there. And I think that's going to be it for today. I will catch up with you on YouTube tomorrow night at 10 o'clock, my local time. And then obviously on Friday, Lord willing, with the weekend commentary. Until I talk to you then, be safe.